Traders, welcome. So let's carry on talking about indicators and how we can potentially use them to filter out bad trades. And honestly, this will save you so much money in the long term. You know, when I'm talking about it, I'm saying it, you know, sometimes it appears like it's a very simplistic view of things. But the key is to develop it and involve it in your trading strategy, to look at your trading plan, to work out exactly, you know, what you're planning to do, and then to put these filters in place and to use these very broad filters to not worry that they're going to take out a few winning trades, but just to know from your own experience that eventually this is going to keep you on the right side of the market and stop you losing trades. Let's look at an example, a trending example, and let's look at how we could filter to stop ourselves from chasing a trend. Now, we all know that very often we see a trend and we think if we'd have bought the high, we'd probably be fine. You know, if you bought the high in Amazon, you probably get away with it fine. But you know, there's going to be times when you're going to take a lot of heat, unnecessary heat. So you're better off trying to get involved in a trend, a strong market, by looking for some kind of pullback, some kind of unwinding. Now, that's all very well, and we can look at price action, and we can do it from a price action perspective, but is there a way of us doing it very systematically? And the answer to that is yes. We can use something from the oscillator family of indicators. Go and check out the indicators videos. Something like an RSI, and I use stochastics myself for a specific intraday setup, but RSI is absolutely fine. It's a little bit cleaner, so let's use that as an example. The way you would do it is you would say to yourself, listen, I've recognized the trend, and by the way, some of you are going to recognize this stock. This is Amazon, it's a daily. I am now going to put on a line on my RSI, excuse me, at 45. Now, traditionally, RSI is oversold when it's below 30, or some people use 25. But you're going to have to understand that if you're in a very, very strong, a very strong uptrend or a very strong downtrend, the RSI is very rarely going to go under 20 or under 30, whatever you've got it setting at. It's not going to hit it because the strength is too strong. And look at Amazon here. I think we tagged it once. Just here, and if you're waiting for that, great, you've got the most beautiful entry and it almost proves the point. But you know what, you want to get, as traders, want a little bit more action than that. But then again, that's kind of the game with the filters. Do you set them really, really tight so that you're getting very few setups, or do you set them a little bit slacker, a little bit looser, so you get more setups? You know, my preference is to loosen them a little bit so that I'm still getting some trades. So for example, you could get, what you do is you say, listen, I want to get involved in Amazon, I want to stick it in my swing trade portfolio, I recognize momentum, blah blah blah, whatever else you think about it. However, I am definitely not going to get involved in anything above 70. So that's a good way of doing it. And I want to get involved when we are below 50 or below 45, for example. I've drawn a line here at 45, and let's just mark it on the chart here. So this is 45. So these are the times that you'd be getting involved. And yes, this is not, you can't just use this as a definitive strategy on its own. I think this is where, you know, some people kind of misunderstand it and go wrong, is that they back test something specifically like buying RSI under this level. You know, nothing when you're back testing it like this is going to work, because it's going to take into account too many different types of market environment. And again, you just want to use it as a filter as opposed to a specific strategy. So here, you know, look, you'd be getting involved in here and you're probably going to be stopped out, or if you're swing trading it, maybe you're fine. But the point is, when the real uptrend is starting, these are the times that you're getting involved. Here, yeah, here, okay, bit of heat there. You know, here you've got involved again. You know, here, if you got it a little bit looser, you've got involved. The point is, it just stops you from chasing things here and getting stopped out. Far better to be involved a little bit lower and being a bit more enjoyment of that. Let's look at something like Bitcoin. Bitcoin's a great example, guys. Bitcoin's just going absolutely ballistic. You know, and the point is with Bitcoin, and this could be anything. This happens to be Bitcoin, but it could be anything. I've seen plenty of small cap stocks do this. Plenty of stocks do this. You know, I've even seen some commodities in their time just go nuts like this. And okay, they had some limits to protect this kind of thing. But the point is, yes, if you chased it, you're going to be all right by now. But you're far better to have waited for a pullback. You know, I know people who were buying Bitcoin here when it was all the hype was here. It went over 1,000. It pulled back to here, and they came out of it because they thought it was the end of the market. Whereas the sensible thing to do is to say, listen, I've already analysed this and I think it's a buy for whatever reason. I'm not saying that Bitcoin's a buy or a sell here, just purely looking at it from a neutral perspective. you can say to yourself, listen, if if the RSI does start to go to the downside on the lower third, the lower quadrant, whatever it may be, I will look to buy. And then that keeps you on the side of not getting involved in stuff that's going to nail you. Similarly, if you were, let's not cherry pick here, let's say you were a massive bear on Bitcoin and you were shorting it, even waiting till at least it was oversold is going to give you a far better opportunity than getting involved anywhere else, because you're waiting for that kind of spike. So here, yeah, obviously it's a losing trade, but here you might just be sharp enough to get a little bit of juice from that before you carried on. The point is, using that keeps you out of getting involved all the time. And the main thing with the filters, the main thing out of all of these filters, whether you're using an RSI, stochastic, whatever, is that it keeps you waiting for that specific setup. So no longer are you worried about something. No longer are you chasing it. No longer are you constantly looking and thinking, I should be long, I should be long, I should be long. Your rules are your rules. And your rules say, I do not get long on, let's use something else, Netflix, until we have stochastics in the lower third of the region they've been for the past year. So we would say, okay, let's get ourselves horizontal line here, and let's say the low of the past few months is here, and then the high of the past few months is, if I can get my drawing pen right, the high we're going to say is around here. So let's say we only want to get involved long. And again, I'm being very crude here, you can do it far more accurately if you wanted to. I only want to get long in this kind of zone. So I'm drawing my little things on here, and I say I'm doing it very roughly. Whenever the price is there, I want to get involved in it. So it keeps you at least in the area, the rough area where you're going to be right. You could be completely wrong, this thing could just completely collapse. Of course, that's where risk management comes in. That's why you have to add all these layers of skills into your trading. But just just by eyeballing this one, guys, and again, I hate to cherry pick stuff, and I'm not cherry picking, I'm literally just picking something at the top of my head. Netflix, so I know it's been a trending environment. There you're involved. Where is it? About here you're involved, you're long. Yeah, you're missing some stuff, but the point is you're keeping on track of it. And again, same thing, let's flip it on its head. Let's not go with just profitable stuff. Let's say you were looking to short Netflix. Let's say you'd seen this chop and you thought this was the top. So when are you getting involved short? You're getting involved short only at the top end of the RSI's overbought. So you're getting involved in this area here, which is kind of a lot better than getting involved here, right? You're getting involved in this segment here, which although is a loser, is not as bad as it would be if you got involved down here. So it keeps you kind of engaged with at least the right way the direction is going, and stops you constantly chasing, constantly missing. You've got a plan, you stick to it, you've identified something, you wait until whatever your filter happens, whatever indicator you're using happens, and then you strike. And you strike with just pure military precision, because okay, there's my zone, I'm going in now, nothing to think about. You may have other layers that go into the setup, like I also want to see this and this and this and this, that's fine, but it's just a yes or no event. It's a binary event. Is the indicator below this level, above this level? Yes. Now move on to the next stage. Takes out all in the heat of the moment cognitive load, especially if you're day trading, and allows you to not get involved with stuff that is just going to hurt you overall.